Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets behind every balance sheet and shareholder report. And today we are digging into Pitney Bowes Incorporated's latest filing. And let me tell you, it is all about debt management. Get ready as we uncover how Pitney Bowes Incorporated is navigating its financial landscape and what it means for you. And before we dive in, if you are new here, make sure to hit that subscribe button and join our community on Discord. The link is in the description below. So, Pitney Bowes Incorporated, a company many of us know for its mail and shipping solutions, has been busy managing its financial obligations. This report is essentially an update on their efforts to handle some of their outstanding debts, specifically their 6.70% notes that are due in 2043 and their 5.250% medium-term notes due in 2037. On the 22nd of December 2025, the company announced the results of a cash tender offer. Think of a tender offer like this. A company says to its bondholders, "Hey, we'll buy back some of the debt you hold from us right now, and we're willing to pay you a bit extra to do it." They were looking to buy back their 2043 notes and their 2037 notes. Originally, they planned to spend up to a maximum of $75 million on this buyback, but the market's response was strong enough that they decided to increase that amount to $80 million. This tells us that investors were eager to sell back their notes to Pitney Bowes Incorporated, and the company saw an opportunity to reduce its debt load. This move is part of Pitney Bowes Incorporated's broader strategy to manage its debt. When a company buys back its own debt, especially when it is paying a premium, it often signals a few things. It can mean they believe their stock or their company's future prospects are worth more than the current debt obligation. Or it could be a way to refinance existing debt at potentially better terms, or simply to reduce interest payments. The report also touches on their common stock. While the main focus here is on the debt tender offer, the mention of common stock, which trades under the ticker symbol PBI on the New York Stock Exchange, is always relevant. It shows the company's entire capital structure is under active management. Now, let's talk about what this debt management means. By buying back these notes, Pitney Bowes Incorporated is actively trying to reduce its interest expenses. For the 6.70% notes due 2043, every dollar they buy back now means they aren't paying that 6.70% interest on it for the remaining years until 2043. This can free up cash flow that can be used for other investments, operations, or even dividends. Similarly, for the 5.250% medium-term notes due 2037, reducing this debt means less outgoing cash for interest payments. While 5.25% might sound manageable, when you are dealing with millions of dollars, the interest adds up. The fact that these notes are listed on the New York Stock Exchange means there is a public market for them, and the tender offer is a way for the company to interact with that market more directly for debt reduction. It is also interesting to note their statements about adopting new accounting standards. This shows they are keeping up with financial reporting regulations, which lends credibility to their overall financial health and transparency. This entire announcement falls under Regulation FD, which stands for Fair Disclosure. Companies are required to make material information available to everyone at the same time. So, this report filing and the attached press release are their way of ensuring all investors, big and small, get the same information simultaneously. And for those who like to dig into the details, the filing lists an exhibit, which is a press release from the 22nd of December 2025, providing more specific information about the tender offer. There is also a nicely formatted cover page in inline XBRL, which makes it easier for computers to read and analyze the data, and ultimately for us to decode. Finally, the report is signed by Lauren Freeman Bosworth, who holds a significant role as Executive Vice President, General Counsel, and Corporate Secretary. This signature signifies the company's official acknowledgement and authorization of the information presented. Now, looking beyond the official statements, what does this all mean for Pitney Bowes Incorporated? They are proactively managing their debt, which is generally a positive sign. It suggests a company that is financially disciplined and looking to strengthen its balance sheet. By reducing debt, they are lowering their financial risk and potentially improving their credit rating, which could lead to lower borrowing costs in the future. However, we also need to consider the broader context. The decision to buy back debt can sometimes be a signal that a company doesn't see more attractive investment opportunities internally, or it might be a move to boost earnings per S-Hair by reducing interest expense. We don't have detailed financial statements in this specific filing, but this debt management action is a key strategic move. Is this aggressive debt reduction because they are worried about future interest rate hikes, or is it a sign of confidence in their ongoing operations? It is likely a bit of both. They are mitigating potential future financial pressures while also signaling confidence in their ability to manage their finances. Overall, Pitney Bowes Incorporated seems to be taking a prudent approach to its financial health. They are addressing their debt obligations head-on, which is a good step towards long-term stability. The success of this tender offer highlights investor confidence, or at least a willingness to exit their debt positions with the company. What is your take on Pitney Bowes Incorporated's debt management strategy? Do you think this is a strong move for the company's future? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord community for more discussions. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.